Hello, everyone. Very good morning. This is Adarsh from Finhancers. I'm joined by Ms. Vanitha, the founder and CEO of cPROFIT Wealth. We are here to speak about the most important topic of conversation in the finance world at this point of time, and that is what to expect from Budget 2023. Just to give you a glimpse, this will be the last and final budget of this government before the elections in 2024. So the expectations are fairly high, and the reason why we are making this video well in advance because the budget is due to take place on the 1st of February. So there's still a few more days for that event to occur. And we wish to talk about it to provide you a glimpse of what you can expect from this very budget. Now, the expectations are sky high, without a doubt, but we are here to tell you about how much we have gone through since 2014, since this government took over, and what we can actually see going into the future. And we're also here to curb your expectation to some extent because we must also understand the ground level reality of our life or our government or our country in general. And that's exactly why Vanita is here as well. And as you already know, she's no stranger to the industry. She's been part of this industry for over 2 decades, and she is a very, very acclaimed wealth manager running a wonderful firm called cPROFIT, which has been in Bangalore since 2013. And we are here to discuss about this. Hello, Vanita. Thank you for joining us.
Hi, and very just greetings to one and all. And it's very good to be here to just give our basic wish list on the budget 2023. Thank you, Adarsh.
Thank you very much. So, to quickly get started, we would like to know how much growth India has actually witnessed since the government came into power. And I want to know this not from a political standpoint, because now now as far as politics is concerned, it can hurt people's sentiments if we speak for or against a government. So our job is not to hear to speak for or against the government, but rather to speak about how far India has come from an investment standpoint or from a stock market standpoint since the government came into power.
Yeah, that's a fabulous thing to start with. So when you talk about an economy, we talk in terms of gross domestic product, the GDP. So what's been the GDP rate or the GDP progress? And again, a lot of equity investors, they would definitely get excited when you talk about GDP rate, because there is a thumb rule which is there in their mindset stating that whatever is the running GDP rate, double of it would be their equity returns. Actually, just it is an expectation, frankly. And just going back to the real GDP figures, see, just you go to 2000, maybe 13, March 2013, and GDP growth was 113 lakh crores. And come to just March 2023, it was close to just 273 lakh crores. For the mutual fund investors or any equity or any investor, they prefer to just call it as a CAGR, that is the compounded annualized growth rate. If I have to literally put it in that way, just economy has grown at the rate of 10.25%. That is the annualized return or the calendar return. And then actually just the absolute growth has been just closer to 142% during this period, 2013 and 23. So many people, in fact, ask us as to just what is going to be by March 2024. As March 2023, it's been close to just 273 lakh crores. The expectations are in the range of 310 lakh crores.
I think that is a pretty staggering number, and I think that number is more than enough for us to give you a glimpse of how far we have come. And of course, we're also here to talk about the potential of the market because obviously the sky is the limit. It doesn't mean we have already reached the ceiling because there's not a long time ago when we felt that the market had already reached its peak. We were never going to go even beyond the 30,000 point mark. And today we are sitting at 60,000 point mark with regards to Sensex. And Nifty has also touched an all time high, which in itself is a beautiful thing to see in the market. The sky is the limit, as we say. Now, another indicator in the economy that we would like to know more about is the tax collections. Now, the tax collections have been pretty staggering in general because I think we were just going through some points before the meeting and we realized that in the financial year 2013-14, the tax collections money came to around 6.33 lakh crore approximately. And this is as per the report from the Ministry of Finance. Now, we'd like to hear from you on what have the tax collections looked like since then, and how will this actually affect the economy? Importantly, because tax collections, I'm not really sure about how it can influence the economy. So I'd like to hear from you on how it will actually influence the economy and how it has influenced the economy since the financial year 2013-14.
Yeah, that's a fabulous thing. In the sense, actually, just when you talk about the buy-in tax collection, so that means the individuals and the corporates have been doing much better, right? Because this will definitely just help the government to just shape up the strong consumption and rewrite the growth story in India. So India growth story is well known. We talk about higher actually just young population, as such higher disposable income, and as such domestic consumption is pretty much huge. And thanks to just Make in India, which actually just came out incentivizing around 14 PLI sectors. So the production has been pretty huge. So we are able to just procure close to just 30-40% of the overall domestic requirement through this Make in India move. And so actually tax collections really just help. When you talk about the resultant effect of the tax collection, it will help the government to just probably spend more on the capital expenditure. So just because we can even put it in this way, the higher tax collections literally say that it is really a start of a capital expenditure driven economy, right? So just because so far, if you look at India, India has been importing um, gold, capital goods, and oil, right? Oil is something which we cannot bring under control, and gold, to an extent, government has tried curbing by just coming out of the SGB, that is sovereign gold bonds, so that right the institutions and the individuals can invest within that one, and even actually just the collateral that is being kept by the banks as a statutory liquidity ratio could also be just considered as the that is either way just the banks could just consider by investing in bonds as well as in gold without importing actually the existing SGB also, they could just pick it as a this one. So just this particular robust collection, tax collection probably can help government in focusing on the capital expenditure, so that right our imports can sizably come down. So having said that, if you look at the tax collections, that is again actually just as you rightly said, 2013-14 the tax collections were probably hovering at 6 lakh crores kind, and 2021-22 the tax collections have been in the range of 27.2 lakh crores or so, and say precisely 27 lakh crores plus. And then actually just 2020-23 tax collections have been 31.5 lakh crore vis-a-vis the government expectation of only 27.5 lakh crore. So that means it is remarkable. Maybe in this period 2013 and 23, if you have to put it as a absolute return, it translates closer to 500% of the tax collection. It's been a phenomenal growth story of tax collections in India.
I'd like to ask one more question. So, what do you think has driven the tax collections in the economy? Now, there was a period during our economy where the usage of black money was very high. As a result, the tax collections were pretty slim. So, why do you think tax collections have gone up sizably? I think that's around 4.5x since the government came into power. So, I'd like to hear from you on what led to that,
See,
in
just
your opinion.
right from all the angles it has grown. One is right, maybe from individual point of view. Earlier, right, people won't be buying everything in online. So post COVID and demonetization, so, right, people started focusing on e-wallets and people started buying big time in online. So just that has really just helped the GST collections to just go up, because GST collection, the expectations were basically just money in the range of 1.15 lakh crores from government, but today it is hovering at 1.5 lakh crores. So thanks to e-wallet, thanks to just e-commerce, so the GST collections have been huge. Again, right, government also just framed two different kind of tax regime. They called it as a old tax regime, which is exclusively for the investors, and new tax regime for the spendthrift. So just for an economy, probably just both are required. Investors also required, the spendthrifts are also required. So that is something well planned. And as such, actually, the collections have been robust. People keep spending, so the productivity has to just go up. So focus has been more on that one. Make in India has really just given a bit of an impetus to this one, and even to the corporates. The taxes actually just startup companies and all the taxes were kept as a very attractive structure. So, and India being a startup hub, actually just close to around 55,000 startups running in India, and out of which actually just if you remember 2021 alone, around 3,200 startup companies have raised probably $63 billion. So that is a very remarkable number. I will not put it as 2021. Probably since 5.5 years, the startup capital that is raised is closer to this much, $63 billion, which is very substantial. So just our feel is one is Make in India is one of the reason. And again, actually, this is the individual in buying everything in e-commerce, and then actually just rest all the GST collections through e-wallets and other things have just literally gone up. Maybe, right, if I have to, sitting in Bangalore, I would like to cite this example. I have been going to City Market, which is a main place where actually just so much of activity happens. So probably I could say just that is also one of the GDP raiser for Karnataka. That's a hub. So I've been going since long, and actually just in last 5 years and the current year, you could see a phenomenal difference. In last 1.5 years, I could not see many cashiers sitting there. Instead, actually, they only forcibly say better pay it via e-wallet. So these are all some of the contributors, I would say. So so that's the thing. So
I
main
think that is very, very significant without a doubt. And this also goes to show the kind of tax collection projection we can probably come up with for the upcoming financial years. Now, coming to the crux of the matter, as there's the final budget of this government before the 2024 elections, I would like to hear from you on what we can actually expect. Because I think this is what everybody has in mind. And I think in the previous budget, people had a very unrealistic viewpoint on taxes in general. People were expecting tax benefits and they felt let down when the government didn't announce any. Because obviously, the government was not in any position to offer tax benefits. That was the most important thing. Now, I'd like to hear from you on what position the government is in at this point of time and what can we possibly expect. And I'd also like to know from the perspective of middle class families, most importantly, because India is one country where the middle class population and the lower class population is pretty high. So I think these are people that might probably want to know more about what they can expect from a taxability, from a taxation standpoint. And I would like to hear from you on what our wish list for the upcoming financial years can actually be.
No, probably that's the right way to start with. And let me start with the disclaimer. See, just whatever I'm going to talk now, it's all about a wish list that probably we at cPROFIT have in our mind. So when you talk about the middle class, I'm sorry, just there is no reason that the same thing should get replicated in the budget because it is just our wish list, right? But it is very thoroughly just researched. We sat as a team and we tried understanding as to just what are the probable kind of moves that the government will look at the ZAR kind. So just the middle class actually just has taken a beating due to the increased inflation and also just the one is the taxation from all angle with the GST and other things coming in, and also actually the fuel prices have just gone up, right? So the post-tax income oppose the taxation and the inflation and all is literally eating away their monies. So I hope that the government will try expanding the tax slabs. Because right now we say just up to 2.5 lakh, the tax is nil, and then 50,000 is the tax reduction. For senior citizen, 3 lakhs, the tax is nil. For very senior citizen, we say just up to 5 lakh, the tax is nil. I hope that the basic exemption limit will go up. And also actually just, it'll be great if the government just keeps it as up to 10 lakh, the taxes are nil kind. So that may be a slightly greedy expectation, but still actually just in such case, the expenses probably just the people who have more monies in hand to spend kind. So that's my expectation because when it comes to the senior citizen, probably they are getting benefits in few ways. One is actually the tax exemption, as I said, up to 3 lakh, and very senior citizen up to 5 lakh, the tax is nil for them. And then on top of it, if you look at the section 80D, Mediclaim up to 50,000, they could just claim as a deduction by paying the Mediclaim premiums. And then even ATTT for them, it is up to 50,000. And again, actually just maybe right in case there is any illness, then they could claim under another section under ATTT up to a lakh kind of. So just for a normal individual, it is 40,000. For the senior citizen, up to 1 lakh, it is exempted. I hope that actually just given the hospitalization expenses or the healthcare expenses, the government should just give a bit more. One is the exemption limit the tax slab should just go up, and the exemption limit, right, that I wanted to be much more than whatever is kept right now. And the even the Section 80D benefit, because the medical and premiums have gone up substantially. So with the pandemic being present in the economy in 2019-20 kind. So that's where I expect a lot more changes will be there, which will definitely attract the middle income payers. And of course, this government has to just present this budget in a most attractive way, being the 10th and the final full budget, I would say.
It's good to know. I think these are some expectations that we can probably have as individuals in the economy. But another interesting point that we were able to note prior to this budget, prior to this discussion on what we can expect from the budget, was the number of tax disputes in the country. It looks like the number of tax disputes in the country have gone up. So, do you expect any form of resolution from that standpoint? Because we were able to look at some staggering numbers. I think we realized that around 12.5 lakh crores worth of money are stuck in tax disputes. So, we'd like to hear from you on what can possibly happen there.
Yeah, what you said is right. When I talk about the tax dispute, it is 12.5 lakh crores, which is very huge. And if you go to 2014, it was only 4.5 lakh crores, right? So just and simultaneously, you have to look at the tax refunds. The tax refunds by that is 21, 22, and all. If you look at that is in 22, like you take close to 2.5 lakh crores have been disbursed in 15 to 30 days. Tax refund to the extent of 2.5 lakh crores have been settled in within actually just 15 to 13 days. So if people file on time, because most of the tax disputes are in a different way, that is, there is a last date even to just take up the set of benefits, but people have just filed oppose that one, right? And I do understand, and probably just our expectation from this budget is that government will just work on speedy tax dispute settlement. So definitely that is one expectation.
Now, I think another thing that we must probably note going forward is that India is in the middle of a startup revolution. I think if the economy has to grow, so should the companies residing in this economic ecosystem. And I think the taxation for unlisted companies have been very, very high. So I would like to hear from you on whether there's any form of benefit that they might receive in the upcoming budget.
Yeah, certainly. As I said, just around startup companies have procured more than $65 billion in last 5.5 years, which is humongous. And then close to around 108 unicorns have been there in the startup space. And given that actually the startups have literally just requested government this time to just maintain the parity on the taxation, because there is a taxation disparity between listed company and the unlisted company. On the unlisted company, right, the capital gain taxes are in the range of 20% vis-a-vis the listed companies, which is only 10%. So there is a request which has come from the startup companies to keep the tax parity.
One of the many, so that is pretty important. I think that is something that we would insist on as well, but we'll have to wait and see on how that goes. One of the many initiatives that were brought up during the tenure of this government was GST, Goods and Services Tax. Now, although Goods and Services Tax was a wonderful move and it has definitely helped the economy, both from the standpoint of collections and from the standpoint of government revenue, we would like to note, or I would like to note personally, that there have been many classification issues wherein the inputs are taxed at a higher rate compared to the output. So, we'd like to know whether there's any form of resolution that could come from that.
Yeah, that is one of the very big expectation, because the government is very keen on bringing down the pollution at this hour. As such, so much of focus has been given on the electric vehicles. That is, they want to just bring in a kind of a proper ecosystem, and FAME actually just the faster adoption and manufacturing of hybrid and electric vehicles, right? Maybe just when you come under the FAME subsidies. So the GST relief, right? GST relief is being given, right, as a PLI scheme for the better EV adoption. And again, actually, even though actually the subsidies are given, so the different components of the EVs are priced at a different rate. Say, for example, the GST is levied at the rate of 5% on the EV sales, whereas on the spare parts, it's been in the range of 28%, right? So the GST on the spare parts is 28%. Again, actually, just when you look at the swappable batteries, which are used for the EV, So that's all tax in the range of at the rate of 18%. So there is no great clarity that is being given on the EV, right? So just actually just the expectation is actually just the government should provide a kind of capex subsidy of around 40 to 50% to set up the charging infrastructure across India. So because you don't have greater charging infrastructure right now in India, right? One side actually just there has to be a clarity on the GST rates of the EV vehicles, because that is going to be the future is what everybody talks about. And again, actually on top of it, right, the charging infrastructure should just develop, and there has to be a subsidy in the range of 40 to 50%, as I said earlier.
I think these are things that we can probably expect in the upcoming budget. It doesn't seem very far-fetched or unrealistic by any chance. Hopefully, we can see something happening in this department.
No, not only in just EV, even in other car and other components also, this kind of clarity is not being given. So that demands definitely a kind of.
But with that said, I think it can be a bit challenging to provide the utmost clarity in the upcoming budget. But we can probably expect as much clarity as possible. I believe, we believe as entities. I will have to wait and see how that goes. Now, I think another major issue that many people or many investors have been encountering, particularly overseas investors, because my focus is on overseas investors at this point, because they are being made to go through a lot of unnecessary documentation, or I would say it's a very, very lengthy process. From having an NRO, NRE account to setting up various applications to doing so many things. Even I cannot begin to explain how much work an NRI or an overseas investor has to do to pump in money into the Indian economy. And if this is going to be difficult, then we might probably have difficulties with regards to procuring investments from FPIs, maybe procuring investments through FDIs. So we'd like to hear from you on what an overseas investor can expect, and whether there is any form of resolution or a form of maybe ease of process that an overseas investor can get going into the future from this budget.
Definitely, the clarity is to be given by the government in terms of documentation, because there is unnecessary and a very huge documentation if a overseas investor needs to just invest in startups in India. So there has to be an ease of operation, undoubtedly. So that has to be one of the focus, because the foreign flows are coming at this hour. Even though, as you know, just if you look at the capital markets in last year, so there has been a negative cash flow from FPAs, that is a foreign portfolio investor. So just whereas actually just even without that, domestic institutional investors and individual investors have been very robust, and as such we were able to just sail through the markets and keep the markets at the same Sensex level. Almost right, we are at the level of 60,000 before 1.5 years and now. So as I said, there has to be a reduced documentation, and a go digital kind of process has to be adopted for the overseas investor who struggle to invest in startups in India. And on the capital markets also, there has to be a bit of ease of operation when it comes to non-resident individuals as well.
Another thing that I'd like to talk about quite a lot is that many of our investors, many of my investors in general, have been coming to me and telling me, Adarsh, I've received a bunch of RSUs or ESOPs that have been vested by my company. And what happens in the situation is that the ESOPs get taxed on the acquiring date, and at the same time, they also get taxed when they are sold. So what happens is there's more or less a double taxation involved here. So we were wondering whether if it's actually good to only tax ESOPs on the date of sale instead of taxing it on the acquiring date as well as acquisition date as well as on the sale date. So we'd like to hear from you on whether there's anything that we can expect from that department.
Yeah, ESOPs on vesting, right? The employee pays income tax at the ordinary income tax rates, and again, actually, just on the value of the company contributions. Okay, and again, actually, just once again, when they sell whatever is the relative capital gain, they end up paying. And I think that instead of taxing it twice, actually, just it's better to just tax it only on sale. That'll be much better, because the company is just giving as the employee is just performed up to mark, or it is a matter of appreciation. So there has to be a clarity on the taxation. Otherwise, it goes dual monthly now.
I think that is something we'll definitely have to look into. I think no initiatives have been taken in that department in many years. We're not exactly sure as to whether if something can be expected from that. But in case if something happens, then I think it's only good for us and our investors, without a doubt. Coming to the most important point that concerns women of the Indian economy. And I think women, I think the government started a very good initiative involving Beti Bachao, which is and Beti Padhao, which is a very, very good set of campaigns that have developed numerous women. And we've also seen a rise in the number of female entrepreneurs in the country. As a matter of fact, I was reading an article regarding the number of female entrepreneurs in the Indian economy right now. And it actually is staggering without a doubt. And I think maybe in the upcoming centuries, in upcoming decades, I'm sorry, not centuries, in the upcoming decades, we'll probably see more female entrepreneurs compared to male entrepreneurs. What do we know? But we'd like to know whether if something can be expected from the perspective of female or women in general.
Yeah, what you said is right. In the year 2020-21, government allocated, if I'm right, close to 28,600 crores to the women specific schemes. Okay, so just as you said, the Bachao, Beti Padhao kind of campaigns were run, and really just it was so great from this government. But I would rather say just it is good to just have Beti's business Bachao kind of a plan now, because being a woman, being a woman, I do understand that what are all the kind of challenges that we face when we just get into the business. And as such, actually, the government has to just extend some more credit support. And then the COVID incentive, because during COVID, many females, right, they were having a tougher time to manage their businesses as well as their families, which were literally COVID struck, and many had lost their family members as well. So it's really just so tough to just manage both the things. So I think the government should just plan to come out of the academic, bringing in some kind of academic brilliance. Say, like I would say, just government should run some incubation centers to support and make them go more innovative and motivate them to run their businesses by just coming out with more of credit, business credit to them. So that's something I expect from this government.
I think more credit, more academic support, more emotional support in general through incubation centers can help them sustain their businesses because there are many female entrepreneurs running businesses across the country. And I think this will be of great support. And I think we can probably expect something from this. I think it doesn't sound unrealistic to expect something in this department because from the rise of this government, we have seen a lot of initiatives centered around women. So maybe expecting something here, as I said again, is unreasonable. It's not unreasonable by any chance. I think as advisors or wealth managers or distributors, we have seen many HNIs probably moving from India to another country with the intention of seeking better tax benefits, with the intention of not even paying tax. In case if it's a tax haven, then you won't be paying any taxes at all. And given that HNIs are paying such significant amounts of tax in the Indian economy, I'd like to know from you on whether there's something that can be done here. Because at the end of the day, the more HNIs leave the country, the more India will suffer from the perspective of tax collections, most importantly. So I'd like to hear from you.
True, that is one of the very, very primary kind of a thing which has to be addressed by the government at any cost. And good of you to Adarsh highlight this one. The high net worth individuals with a taxable income of more than 5 crores today ends up paying around 43% kind of tax, which definitely impacts more than 10,000 kind of high net worth individuals who are obviously just the business entrepreneurs as well. All right, so just if this continues, probably they'll think of relocating to some tax friendly kind of jurisdictions. If that happens, we will end up losing close to 40,000 to 50,000 crores of consumption. Right? That is sizable. So just I think that we don't want to lose this cream entrepreneurs kind in India, especially the business class. And as such, I feel like government has to just slightly bring down the taxes as well. Otherwise, it is very substantial now. So because the more they get, the lesser they pay on the taxes, the more will be the investments also to the economy.
Now, I think one of the most important things in the entire world, or I would say in our country, most importantly, is education. Education plays a crucial role in the development of this economy. Uh, and this will be the case forever. This will be the case for eternity. And I think the best way to probably make our education better is to look at it from a digital standpoint. We have to try to improve ourselves digitally. And of course, there should be more funding, more credit given to institutions so that they can operate better. Now, I'd like to hear from you what we can expect from this department.
See, just the government has been very robust in bringing a digital system in place from day one. But I think that much more has to be brought because post COVID, again, the economy has gone slowed down in terms of aspiration, is what I would say. And just moreover, the youngsters actually who didn't go to school for long, literally, right, they have not come back to the shape fully. So their demands a kind of a very moral kind of a support, and a moral education should go must. And moreover, actually, the digital education ecosystem has to be brought across all the kind of maybe just the learning kind of a thing, and learning centers, through learning centers, and probably they have to be given much more tax swaps, so that probably they'll just focus towards a new education policy which was framed by 2020. So that plays a vital role because COVID has really just given a kind of a negative impact to the growing kids in this way. So that has to be addressed, is what I strongly feel.
I think that will play a crucial role, as I said, and this is something we are really looking forward to, without a doubt. Now, coming to our industry, coming to the mutual fund industry, most importantly, what can we probably expect from the standpoint of the mutual fund industry in this budget?
Yeah, the thing is that when it comes to mutual fund schemes, you've got IDCW, that is income distribution come capital withdrawal, and then growth. In case if somebody is looking for the regular, not regular, maybe the whenever the fund does well, they want the returns to be shared, then they need to just go with the IDCW, and the other option where they want to just take out the capital appreciation whenever they just withdraw. So when you look at this way, I'm of the feel like probably just there is a switch within the scheme. Say like if X blue chip fund is opted, if somebody is just invested in X blue chip IDCW, if in case they want to just move to same X blue chip growth option, then there is still a taxation now. There is a load on the taxation that applies. I think that should not be applicable, is what I strongly feel. And the government has to just work on the long-term capital gain taxes when it comes to equity. Right now, a long-term capital gain tax on equity is kept at 10%, leaving 1 lakh in a financial year. So looking at the way the Indians have been investing, where actually the demat account numbers and all have gone much more than what it used to be. It has all gone more than triple in last 2-3 years. So I think the government has to just reduce the long-term capital gain tax as well. So these are all some of my expectations or submissions when it comes to this budget 2023.
I think one of the biggest growth drivers of the Indian economy will be our workforce. It'll be the demographic of 18 to 40, 45. And I think India has a great concentration towards a particular demographic. And what this means is that our workforce will be very, very huge. And in the next decade, I think we'll have a huge workforce, bigger than probably any other country on this planet. So I would like to know from you on what we can actually expect, because I think people working deserve better benefits. People at work need more benefits to continue working at the same rate at which they are. So what can we expect there?
True, actually, just if you look at Niti Aayog, so just probably as per that report, by 2930, the gig force, the India may be a gig economy, is what I feel. Because you could see just a lot of this thing like Ola, Uber, Zomato, Swiggy kind of people. A lot of people are
Freelancers in general, many
right.
freelancers and so many people.
Such kind of of course, the freelancers and other things. So just if you look at Niti Aayog report, which noted the 2930, the that is gig workforce may touch around 24 million, right? So just that is the kind of expectation we have. In such a case, right, even just by 2020, government tried just bringing, central government tried formulating a code on social security for the gig workforce. But I'm of the feel like that has not been effectively taken or carried forward by the state governments. So because this kind of gig force, they don't have any kind of committed benefits as we have. They don't have a provident fund. They don't have a health insurance, disability insurance, and all kind. So that is definitely, there is a necessity, as actually just the gig force is just growing up day by day. So there is definitely a necessity to just give them a bit of social security, maybe minimum wage definition could be given, or a tax relief, and then what are the ways we can upskill them. So those are all to be concerned, and I am very confident that this will get addressed. As 2930, it is going to be much more crucial with gig force going up in a bigger way.
I think in this age of digitization, we can see a lot of people using UPI apps. We see a lot of people using Phone Pay, Google Pay, so many apps that have come up. And on top of that, a lot of things have become digital. I think even the smallest of shops, even your tiny merchants that sell supplies near your house are accepting Google Pay at this point. And while doing so, what happens is they are probably incurring some charge. They're incurring some charge, that is, they are probably being made to give away some of what they earn in the form of charges. So, don't you think people deserve some form of benefits for implementing digitization at their respective stores or at their respective shops, or any individual perhaps that has gone completely digital?
No, when you talk about the complete digitalization, so definitely right for them when it comes to the GST. Today, just up to 20 lakhs, the GST is exempted, right? Any businesses which earns less than 20 lakhs, the GST may not be applicable kind. So just one is there are whereas actually just they'll not be able to just match up with the input credit also there, right? So when they don't take up kind. So just one is getting digitalized one way is good, but probably just if you go back to the past, government was talking about the cash transaction tax. So there is a very strong feel like the government will try reducing the tax slabs in a bigger way and end up just taking up the cash transaction tax in as a that may be their priority is a feel which was running in the mindsets of people even before 5 years or so. So being the complete budget, probably there is an expectation on that one. And also just the total volume of the UPA transactions have already crossed around 74 billion, which is like a 90% kind of a hike from 38 billion in 2021. So that is like a very substantial kind of a thing. Yeah, definitely it is big time to just probably incentivize those businesses which goes digital, right? So, but how will they just monitor? There is a $1 billion question, but in terms of just transaction, definitely they will be able to just see as to whether it is fully digital or not. And government has to incentivize so that, right, the businesses will get very motivated to go digital.
Now, coming to another question with regards to mutual funds, particularly, I think a lot of people are talking about the fact that it's big time that people launch mutual fund linked retirement schemes that offer similar concessions to that of your national pension scheme, that is your NPS, as it's commonly known. What are your thoughts on that?
Yeah, right now, if you look at right, mutual fund tax savers or getting the deduction benefit if somebody invests up to that 1.5 lakhs under ATC. And again, actually, just even you have some retirement plans. That is, you've got some pension plans or retirement plans kind, which again will come under only ATC. So there is definitely an expectation, or it is rather a submission to the government to say that please just consider the pension scheme or the retirement scheme of mutual funds at par with NPS. So that is definitely an expectation.
Now, I think one of the most attractive forms of investment, or at least I would say historically has been an attractive form of investment in the Indian economy, is real estate. And I think real estate has taken a big beating. Several countries are already going through a real estate crisis at this point of time. So, what can we probably expect from this point, from the perspective of real estate in this upcoming budget?
Yeah, real estate as a sector has been the badly beaten up kind of a thing because GST came up and then actually just everything was slapping this particular sector. One is GST demonetization because it was majorly driven by cash. So when demon came and they could not take up the beating. So again, actually just RERA was brought in. On top of it, actually the pandemic has just put them into a ditch. So as such, actually there is definitely a requirement for the government to focus on the real estate, maybe right, giving tax relief to the loan goers. That will again just incentivize or motivate the middle income people. See, just now the section 24B. So the if somebody takes up a home loan, probably the loan principal will just come under section 80C, and the interest will come under section 24B, which is kept up to a deduction of 2 lakhs per annum. And I feel like it should go up to 5 lakhs at least, because you don't get affordable housing for actually just because the EMIs outgoes are very substantial. So as such, I feel like taking the section 24B of the loan commitment, because in the initial years, the interest outgo is much more. As such, actually, just that has to be considered up to 5 lakhs, so that the real estate, as it is, will get a big kicker from the middle income segment.
I think that sounds pretty good. I think that's exactly what all of us were expecting as part of today's call. Of course, people have other expectations, but these are our expectations. And as a disclaimer, once again, these are nothing but there's nothing but a wish list that we have put together of the realistic expectations one can have before the upcoming budget. Of course, a lot of interesting points were communicated.
Yes. Before we conclude, there is only one point. We just spoke about keeping the tax savers at par with the national pension system. In the same way, we have also submitted to government our point stating that, like equity linked savings scheme, why don't you consider debt linked savings scheme? Because the government securities are today available to the individuals as well. So just and those who have a difficulty in just investing and monitoring or tracking, and who could not block the money by parking it for long, and who could not afford to trade, we thought government has to introduce a debt linked savings scam, a debt linked savings scheme like a ELSS, DLSS is something. We also submitted our submission to government stating that this will definitely boost government in getting more debts. This will also help the corporates in just getting the better debts, right, in procuring the loans in a better way. So that is where actually just we have also placed a submission to this one. And we also anticipate an increase in the tax exemption. That is a basic exemption, as I said, and tall expectation is there in terms of expansion of ATC and ATD benefit. So sorry, Adarsh, you can proceed.
That should be totally fine. I was actually about to ask you for your closing remarks before I close things off, but I think you've pretty much summed up everything that we were expecting as part of today's call. And to go back to what I said, yes, as a disclaimer, all of this is nothing but all of this constitutes our wish list, something that we have submitted to the government. We're not exactly sure as to what will happen. We're not exactly sure as to how things will go, but these are the most realistic forms of expectation. I would say it's rather comprehensive because we have put together everything that we felt was necessary. Hopefully, we can at least get one half of it, or probably 75% of it. We'll have to wait and watch. But for that, you'll have to stay tuned. And this has been me, Adarsh, the founder of Finhancers. And I'm joined by Ms. Vanitha. Thank you very much for joining us and letting us know on what we can expect from our upcoming budget. I would like to know one more thing before I close things off. I'd like to know whether if you have any thoughts you'd like to share in the form of a closing remark before we close things off.
Yeah, one is actually just 2000, whatever said and done, 2022, 20, that is 23, 24 is going to be a year of roller coaster rides only. So because the global economy is not in great shape, so I would request every investor probably to just participate in the capital markets by investing in a staggered way, and definitely just track your portfolio. And also just if in case you have any short-term goals, see to that you just have enough liquidity in the portfolio. All your long-term investments, you could definitely peg it to the capital markets or the capital markets oriented kind of mutual funds and other options. And please contact the advisor or the distributor to just make your investment decision, because you cannot always just plan on your own. Do it yourself is good, but not every time you do it, because you may not be completely knowledgeable to take an investment call at every point in time, because we live in a world which is very diverse and which is very dynamic as well. And for the ever-changing world, you need to approach an advisor and a distributor. And thank you so much for joining us, and let us just make investing interesting. And thank you, Adarsh.
Yes, thank you very much for sharing your thoughts. Obviously, all you have to do is reach out to us at our office in Jayanagar 7 block. We'd be more than happy to have a discussion with you. And before we close things off, I would urge you to follow our social media pages, the cPROFIT social media pages across Facebook and Instagram. We'd be more than happy to contact you. And on that note, I would like to say goodbye, and we'll see you very, very soon.
Sure. You could also just check out if you want to be a do-it-yourself investor, or if you want to just work on limited investment options, please just contact Finhancers as well. And they are in 7th block, Jayanagar. And then please visit their website to decide all your investments. Thank you so much for joining us.
Thank you very much, everybody. Have a good day.